It's Wednesday the 21st, I'm FX Plu and this is CurrencyTransfer.com's market update. It's been a wee while, I do apologise. Did you miss me? Probably not, but I've been away. I spent some time in the Tel Aviv office last week, and on my return it was a little chaotic here. We were very short-staffed as our big burly ginger ninja has been taken down with pneumonia and actually hospitalised. So get well soon, buddy, and I'm sure you'll join our well wishes there. I have not been absent because I got the non-farm Friday so horribly wrong. I must make that clear. I called 207, you may remember, against a forecast of 200. It actually came in at 303. Who'd have thought? Certainly not me. However, I was calling stronger than forecast. And so, to be fair, kind of got that on the money. Not enough to win the sweepstake nonetheless, and I endeavour to be a little bit closer next time. But look, a lot's happened in the meantime, and as you'd expect, there's a lot going on in the market. This week alone, we've seen sterling do well off the back of the Brexit transition deal on Monday. It's a positive step for the negotiations as it removed a degree of uncertainty and did confirm the December 2020 end date, but it hardly deserved the reaction it received in the market. Monday saw sterling deliver a clean sweep, gaining against all the majors. And yesterday's CPI inflation data in the UK just trimmed the sails slightly and triggered some profit taking against the recent run of form. CPI inflation data fell by more than was expected. The headline was 2.7%. That was against a 2.8% forecast, and importantly, still further below the 2.9% that the Bank of England was expecting when it was alluding to rates rising faster than forecast the week before. Logically, this data reduces the chance of interest rate hikes being seen in May. So sterling, has sold off slightly, and cable came back down towards the 140 figure, where it remained for most of the day. Sterling euro touched a high of 114.36 yesterday as the euro continued its recent correction, but it pulled back a little bit overnight as the euro approaches the strong support level. Today sees the final piece of economic data ahead of the MPC meeting tomorrow, and its employment data due to be released. The headline of 4.4% is going to pass without much interest, but the wage growth will be looked at with more detail. Hopefully that will have grown from 2.5% in January to 2.6% in February. Over in the US today, the FOMC chair is taken by the new guy Jay Powell for his first meeting. In recent years, the Fed has lost a little bit of its dominance under the reign of Janet Yellen. The more advisory attitude that she took a little bit away from the impact that Greenspan and Bernanke held over the market. It's generally been taken that the Fed is almost discussing policy with the market in the meetings. So it'll be very interesting to see how Jay Powell exerts his authority now. The short-term direction of the dollar is likely to be driven by these comments. Is it pointing to 4 rate hikes this year, or will it trim the sails of the dollar slightly if it reverts to suggesting 3 rate hikes is more likely? If it seems 3, we may see the dollar decline slightly off the back of that. The dollar index reached 90.45, which is getting very close to the 90.50 resistance level. Charlie on the charts claims this resistance will need to be really broken through if there's going to be any continued dollar rally that is sustainable. Over in the Eurozone, the rumoured discussions earlier this week of the ECB, considering 2019's monetary policy, proved to be little more than rumour. And any short-term support seen for the single currency on Monday has all but disappeared. More likely discussion would be surrounding the tapering of the asset purchase scheme, as Draghi has already alluded to this himself. But as we know, he's in no hurry to commit. Euro-dollar fell through a strong support at 122.60 on the back of the expectation of a 4-hike policy in the US. It has bounced from a low of 122.41, but still remains under the 122.60 level. We'll keep you posted on any interesting developments that come through. Any questions that you may have, pop them in the comments below. Use the hashtag AskPlu and they'll get to the top of the list. All the best. See you again soon.